concepts and principles that we need to have a firm foundation with is GAAP. GAAP stands for Generally Accepted Accounting Principles. And GAAP tells us that information must be three things. Useful information must be relevant, it must be reliable, and it must be comparable. So the information that we're given as investors, for example, the information needs to be relevant. Is it relevant for me to be able to make a decision? Is it reliable information? And again, we'll be talking about these in more detail, but reliable. How reliable is the information? Do you have a document stating this is what you paid for this item, or is it just a number you made up? And is your information comparable? So we're given these methods of, for example, inventory valuation methods that we're allowed to use. That way, an investor can look at two companies that are keeping their financial records and say, okay, I know they're following a certain set of rules, therefore these companies are comparable. I can compare them. Without a set of rules, then there's nothing to compare a company with. It's apples and oranges as opposed to apples and apples. So let's look at some examples of these concepts and principles. So Jane's personal assets are not recorded on the company's balance sheet. This is an example of the entity concept. This means that a company is separate from its owner. So Jane is the owner of this company, and her personal assets are not recorded on the books of the company because they are separate entities. Greg records furniture at its cost of $12,000, not its market value of $16,000. This is an example of the cost principle, which states we record assets at what we pay for them. It's historical cost. That is reliable information. Jerry does not make adjustments for inflation. This is called the stable monetary unit. As accountants, we're conservative people, and we do not make adjustments for inflation because we believe over time that the dollar will remain stable. An account payable of $5,000 is documented by a statement from the furniture company showing the business still owes $5,000 on the furniture. Your friend thinks you should only owe about $4,000 at this point. The account payable is recorded at $5,000. That's the reliable amount. This is because of the reliability principle. So you'll note that the cost principle and the reliability principle are very closely related here.